Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 276 on June the 23rd, 2023. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Opendoor Technologies, Norwegian Cruise Line Holdings, and Enovix Corporation. And we discuss three new trades on SoundHound AI Inc., Snap Inc., and Pinterest Inc. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on today's show, or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC at theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And for anyone that wants to learn how to trade options, I teach students how to trade options, not just study theory, with a combination of videos and live coaching calls. If you're ready to take your trading to the next level, send me an email to schedule a phone call. Now, the equity markets finished the week lower, ending the streak of positive weekly gains. The Dow Jones Industrial Average lost 571 points, closing at 33,727 points. The S&P 500 index retreated 61 points, ending the week at 4,348 points. And now it's time for the topic of the week. The topic of the week is immersion. Now, I want to share a little story with you guys. In the winter of 2007, I was able to live in Brazil as a foreign exchange student. Aside from being somewhat familiar with Brazilian culture, I really was not prepared to live in Brazil at all. Most of my previous travels had been to Europe, a place where most people have been taught English in school, even if they may not feel comfortable speaking it with you. Brazil was quite different. I had studied Spanish in high school and college, so I figured at the very least I could speak some Spanish and they would understand me. That was true. However, I did not understand their responses in Portuguese at all. Plus, I had only studied Spanish. I never had to speak it. If I needed to learn to speak Portuguese quickly, no one really cared if I could read or write it. I just needed to be able to go out and speak it so that I could speak to the people that I interacted with every day. And I was amazed at how quickly I was able to learn conversational Portuguese simply because I was living there. From the moment I woke up in the morning until I went to bed at night, 99% of the people around me spoke Portuguese. That was the best way to learn a new language. I was able to learn option trading very quickly because I worked on the floor of an exchange and was surrounded by people trading options all day long. In many ways, options has its own language, and I learned to speak it through immersion. My question to you is, how will you create an immersive environment to learn to trade options? I would love for you to take my course or sign up for coaching, but not everyone's going to do that. Not everyone can even afford it. Still, in order to learn the skill, you need to immerse yourself in options. Maybe that means buying one of the 30 books or so that I have on option trading that ultimately teach you about option trading theory. Maybe that means you allocate a little bit of capital and start placing trades every week that don't require much capital so that you can learn how to trade options and how they are affected by price movement. But if you want to become a successful trader, you must move beyond simply studying option trading theory and actually start making trades. That's why I suggest a trading style on this show that actually requires very little capital. You must immerse yourself, and if you commit to learning to trade options, you'll learn a skill that can change the way you look at the financial markets for life. You need to go all in, just like I did, and you'll see the results. You need an immersion course in options. All right, so let's get into the trade review from last week's trades. We're going to start off with a covered call on Opendoor Technologies, symbol O as in Oscar, P as in Papa, E as in Echo, N as in November. At the time, the stock was trading for $3.01 per share. I looked at buying stock and selling the July 3.5 call at 25 cents, which could give us a return of 24.58% in 5 weeks. Well, shares of Opendoor lost 8 cents, closing the week at $2.93 per share. The call option we sold also lost 8 cents, leaving us flat on the week if we were to close the trade at this point. The stock price is still well above the break-even point, plus with 4 weeks left on this trade and no gain or loss on the week, I certainly would lean more towards leaving things alone, leave things as is. No adjustment is needed on this trade so far. Let's just give the stock a little bit of room to breathe and see how it looks next week. Next up, we have a credit spread. I looked at Norwegian Cruise Line Holdings, symbol N as in November, C as in Charlie, L as in Lima, H as in Hotel. At the time, the stock was trading for $19.12 per share. I looked at selling the July 19-18 put spread at 38 cents, which could give us a maximum possible loss of 62 cents per spread. Well, Norwegian Cruise Lines picked up 27 cents, closing the week at $19.39 per share. The out-of-the-money put spread that we sold is even more out of the money. The spread has lost 17 cents so far, nearly half of its original value. Now, I still like this trade, so I'm not apt to close the trade yet at all. Still, some people might want to take money off the table, which is fine if you do. There's 17 cents that you could take off the table, walk away from this trade, and actually get ready to trade another trade, or you could decide to watch this thing go all the way to zero. We're still well above our break-even point, and the trade is moving in the right direction, so I'm more keen. I'd like to watch this trade expire worthless, so no adjustments are needed at this point either. And next up, we have our debit spread, and spoiler alert, I did not get 3 for 3 this week. The debit spread we looked at was on Enovix Corporation, Inc., symbol E as in Echo, N as in November, V as in Victor, X as in X-ray. At the time, the stock was trading for $15.12 per share. I looked at buying the July 14-15 call spread for 60 cents, which could give us a maximum gain of 40 cents, or that's a 66.67% return in 5 weeks. Well, shares of Enovix fell $1.33, ending the week at $13.79 per share. The in-the-money call spread that we bought is now out of the money, so we are also well below the break-even point, and it's definitely worth considering an adjustment. Now, I'm leaning towards selling the July 14-15 half call spread at 35 cents. That would leave us short the July 15-15 half call spread. Essentially, I'd turn the debit spread into a credit spread. And the 35 cents that we would collect for selling the spread would offset the 35 cents that we lost on the debit spread this week. Now, if I were to make this adjustment, I would still lose 25 cents on the original cost of the spread. Plus, I would be open on 50 cents, the new 50-cent spread, which means my maximum loss would actually increase to 75 cents. Now, for that reason, I want to exercise some patience. I don't want to make this adjustment and then watch the stock pop higher again, which would totally tick me off. So I did the math on an adjustment, honestly, and have decided to wait. There's 4 more weeks before expiration, so we do have some time before we really need to make an adjustment on this, and it gives the stock a little bit more room to breathe. If the stock stays lower, I might also sell a put spread to turn that new credit spread into an iron condor, mostly in an attempt to offset the rest of the capital loss, that 25 cents on the trade, and ideally walk away from this trade flat or for some small amount of profit. I definitely want to let this trade get a little closer to expiration as well before I decide to turn it into an iron condor. Iron condors do not handle big price movements well at all. I don't want to put one on now because of the risk that this stock could move and actually turn my adjusted trade into a loss. So either way, we have a little bit of time to consider the best course of action on this trade. So I'm going to take a breather and just relax. So that's it for the review for last week's trades. We're going to get into this week's trades. Of course, all of the trades on this week and for the next couple of weeks we'll use the July 21st expiration date for monthly options in July. So we'll start off with our covered call. We're looking at SoundHound AI Inc., symbol S as in Sierra, O as in Oscar, U as in Uniform, N as in November. The stock ended the week at $3.66 per share. I'm looking at buying that stock and selling the July 4 call at 30 cents, which could give us a return of 17.49% in 4 weeks. Now you enter this trade by buying stock for $3.66 per share and selling the July 4 call at 30 cents. This trade makes the most money if stock prices finish above $4 per share. The break-even price on this trade is $3.36, and in real terms, the stock purchase would require $366, and you'll collect $30 for selling the option. Next up, we have a credit spread on Snap Inc., symbol S as in Sierra, N as in November, A as in Alpha, P as in Papa. The stock ended the week at $10.82 per share. I'm looking at selling the July 10.5/10 put spread at 16 cents, which could give us a maximum possible loss of 34 cents per spread. Now you enter this trade by selling the July 10.5 put at 51 cents and concurrently buying the July 10 put for 35 cents. This is a credit spread because we are selling the spread. This trade makes the most money if stock prices remain above $10.50 per share. The break-even price for this trade is $10.34, and in real terms, you'll receive $16 per spread that you sell and have $34 at risk. And now our final trade on the week is going to be a debit spread on Pinterest Inc., symbol P as in Papa, I as in India, N as in November, S as in Sierra. The stock ended the week at $26.24 per share. I'm looking at buying the July 25.5/26 call spread for 32 cents, which could give us a maximum gain of 18 cents, or that's a 56.25% return in 4 weeks. Now you enter this trade by buying the July 25.5 call for $1.47 and concurrently selling the July 26 call at $1.15. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $26 per share. The break-even price on this trade is $25.82 per share, and in real terms, you'll pay $32 to enter the spread, and your maximum gain is $18 per spread. So that's it for this week's show. Man, thank you guys so much for emailing me. The emails that I've gotten, the questions that I receive lead to topics of the week. Makes it so much more fun to have some interaction. Speaking of interaction, I'm working on an idea that will be a lot of fun for all of you guys and give you more of a means of creating that immersive environment. So there'll be more to come, more to discuss in the next few weeks. For now, I hope you have a great weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.